My name's Dave Dubeau, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. And welcome back. Today, zooming in from our new office, getting things set up here. It's a new episode of the Property Profits Real Estate Podcast. I'm your host, Dave Dubeau. Today, zooming in from the beautiful city of Boise, Idaho, we have a very, very experienced mobile home park investor, Brett Bowman. Brett Bowman, he has been doing this for quite some time. He has got a bunch of communities, I think 25, if I'm not mistaken.
That's
Brett.
right. Yeah, 25.
25 different communities, mainly in the Midwest. And we're going to be talking about all things mobile home park investing. Brett, welcome to the show. Great to have you.
Thanks so much, Dave. Excited to get chatting about mobile home parks.
Okay, so we kind of got the big picture of how many different communities you have. Maybe let's translate that into individual units or pads. Like how many does that encompass altogether?
So across the 25, we've got 1,600 lots. And that includes a few. So 3 of the parks are RV parks and everything else is mobile home park.
Okay.
Specifically, we like to buy long-term RV parks, not the short-term or nightly RV parks, because they operate pretty similar to a mobile home park. So that's kind of the 2 asset classes we do.
Cool. So walk me through a long-term RV park. I've interviewed a number of people in the space. Is this kind of a newer thing now with, people being more mobile with challenges with housing, with stuff like that? Tell me a little bit about the long term.
I think you hit the nail on the head. It's been around for a while, but certainly has gotten a lot more popular post-COVID with people being able to kind of live anywhere. Obviously, there's affordable housing crisis going on in the U.S. right now in general, where we just don't have as many affordable housing options. So more and more people like the flexibility of living in an RV. And so the definition of a long-term RV park is monthly. So you have your monthly leases, and people, in a mobile home park, just to contrast it for you, in a mobile home park, someone that lives there usually owns their home. And
they're not all that mobile, actually.
They're really not. They really aren't. To move a home, if you wanted to move your own home, it's going to be at least $5,000 to move it. Even if it's in the same park, you're going to spend that much money to move it. It's quite crazy how expensive it is. So logistically, if someone wants to move, they are going to sell their home and buy a new home, just like, a normal single family owner would. On the RV parks, so finishing that thought. So people in a mobile home generally stay at least 8 years. So that's kind of the average.
Okay.
And the home, once it's moved, it never moves again for the most part. RVs, on the other hand, are obviously very mobile. They can pick up and move in the same day they came in, and it's super easy for them. So you're looking at monthly stays, and they typically are about 8 to 10 months that people will stay.
I was going to ask that. Yeah, how long they're hanging around for. So let me back up for a second here, Brett. Is the long-term RV park, is this kind of a newer part of your portfolio, or have you guys been doing that for quite a while?
No, it's newer. We've had, even since the second or third mobile home park we bought, we've had some RV component, because you generally will have some lots that are RVs, just because you can fit more, you get some density. So you might have an area of your park that just does not fit mobile homes, and it could fit 3 or 4 RVs just because of the length and size. So that's one of our first parks is just like that, where it's around 60 lots, but up in the front we have some really short lots, and we have 5 or 6 RVs up there. So it's not, that part's not new, but buying that are purely RVs, we just started doing that about 3 years ago. And so far just have 3. So we've averaged 1 a year for the last 3 years. And honestly, they've turned out really well. The thing that's great about them is that the logistics are pretty easy. You don't have to worry about, there's a lot that goes into the management of mobile home parks, because buying homes, moving homes, installing homes, selling homes all takes a ton of time. Where with RV parks, it's just get the RVs there and it does it itself.
Interesting. So I'm just curious, like the demographic of the people that are staying in the RV parks, what have you guys found? Are they retirees kind of hanging out for a while? Are they digital nomads? Are they people that are for lack of a better term, kind of semi-house, but like the RV is their full-time home kind of thing. What's the makeup?
Yeah, and I should clarify where our RV parks are. So two of them are down in the New Orleans area, and they're specifically kind of the southern New Orleans area, where kind of the peninsula, which is where all the oil rigs are. And
Ah,
so those parks in particular are workforce housing. So the people staying there are people coming in on 6 to 9 month contracts to maintenance, like kind of
mm,
fixing equipment and maintaining things. It's great in the sense that there's always demand. So we always have like high occupancy in those parks. Rents are pretty high. A lot of those companies actually pay the rents for
yeah, they get a
their
stipend or
employees.
whatnot for housing. Yeah, so that
Exactly. Yeah.
they're probably making money staying in their
Yeah.
own RVs in your park.
That's exactly right. Yeah. And then another one of our parks is our core market is the Midwest. So we're like kind of starting Kansas City, built out from there. So we're in Des Moines, Iowa, Springfield, Missouri, Kansas City are kind of our big three. And then New Orleans is relatively new over the last few years. We've been doing that. So back closer to kind of that Kansas City area, we have another long-term RV park, and we see a completely different type of demographic there. You'll see anything from travel nurses to people that are maybe retired and they like to be able to switch RV parks and just kind of see the country, things like that, but still hyper focused on getting the longer term residents. We do have some nightly residents in that one, but we generally are pushing for long term.
Very interesting, Brett. Well, thanks for kind of letting us know what this long-term RV thing is all
Of
about,
course.
because yeah, I think it's becoming more and more of a real thing. Now, let me ask you this. I've spoken to some other mobile home park owners, and one of the challenges with mobile home parks, from what I understand, is that, they were a boom back in the 1950s and 60s or whenever it was they got built out. And then municipalities kind of figured out that, it's not great for the tax base because they're getting like one much smaller tax bill than they might otherwise, and they still have to provide tons of schools and hospitals and all that kind of stuff. How does that compare and contrast to the whole RV park, long-term RV park? Like, are municipalities a lot happier about those and willing to approve those kind of build outs if you were trying to build one from scratch? What's your take on that?
Yeah, so I will just preface that I haven't built a park yet from scratch. So I haven't had the experience of going and having to fight zoning from ground up development. But we've had to fight plenty of municipalities on other things. So one of the most common things that we have to kind of go push for is like you've got things with lot sizes, lot types, meaning whether it's mobile home or RV, lot counts, what we can do with water. So for example, our by far most expensive, the largest expense, it's at least half of your expenses on a mobile home park or an RV park is water.
Wow.
So it's like what the tenants are using is going to run up your bill. So we go in and work with municipalities on submetering. Most municipalities are okay with us paying the big bill and submetering and billing back the usage as long as we can prove what people are using and we use their rate. So we're not making a profit on it. We're just billing back the fair rate
But
that
at
the city
least at
would
least
bill.
you're covering your costs, kind of thing.
Exactly. Yeah. Yeah. And honestly, we're happy if we're covering 80% of the costs in that situation because you still have some leakage where
Mm.
it's like no one's actually using it. It's just running out the lines. But so that's one thing. And we have, some municipalities, most of them are totally cool with it and like see the benefit for the environment and everything. But we have one in particular that's just like hard no. So we run into some issues like that. The other thing you'll see is people just think that mobile home parks are ugly so they don't want them in their backyard, that kind of thing. And I will say, in general, they're more kind to RV parks. They see them as like, the RVs get updated obviously more often. A mobile home could sit there, like we already talked about, forever. So you have things from the 60s or 70s are still sitting there, and no surprise, they don't look great. They're falling apart.
Yeah.
Where the RV parks, you can kind of enforce this, the RVs need to be no older than 2010, for example. So it's going to look nicer that way. So, I mean, from my experience, I would say municipalities are much kinder for RV parks than they are to mobile home parks.
So
Um,
Brett, did you, when you first got into real estate, did you jump right into mobile home parks, or were you investing in other things prior to that?
no, I got into single family rentals first. So, are
Oh,
you familiar? You've probably heard of the Burr strategy.
okay, of
Buy,
course. Yeah.
yeah, buy, rehab. I'm just going to explain it just in case. Buy, rehab, refinance, repeat. Right? Rent, refinance, repeat. Anyway, I'm
Yeah.
repeating it. So I was doing that with single family homes for a while. And then as I was getting into fourplexes, so I was about to jump in and buy a fourplex. One of my friends overheard me talking about it and was just thought, have you ever thought about buying a trailer park? And I was like, heck no, who would ever do that? And so I started looking into it from that one conversation, and serendipitously met a guy near me, kind of a neighbor that had already bought a mobile home park and found a second one nearby. And I bought that with them. And it's kind of like blew up from there, where I started realizing, wow, this is so much better than single family rentals. Just to give you an idea, I love talking to people in California that want to go buy $1 million single family home. And I explained to them that they can buy $1 million mobile home park that has 50 units in it. If you're in the right area, right? Like, you can't get that everywhere, but it's just so much better economies of scale, and the risk is better, all those things, than a single family home could be. So.
Perfect. Well, you kind of touched on the question I was going to ask, which is kind of compare and contrast mobile home parks versus other asset classes. I think that did a good job there. Now, you touched on it earlier, but compare and contrast long-term RV parks versus mobile home parks, pros and cons of each side by side. Now that you got
Okay, sure.
both.
Yeah. So ultimately, and this is property profits. So the profit you care most about, or the revenue stream you care most about, is lot rent. So on a mobile home park, you have several ways you can make money, but the two biggest ones are lot rent, and then you could have some kind of rent on the home itself. But the rent on the home itself isn't counted toward the valuation of the park, meaning that it doesn't count towards your net operating income. People aren't going to pay extra for it. They just care about that lot rent. So
let me back up, pause you there for a second. So if you own your own mobile home park, a good chunks of the mobile homes in there are owner occupied, but there might be a few that are park owned that you rent out. Is that what you're talking about there?
You nailed it. That's the term and everything. Yeah, you got
really
it.
And then but those that are park owned do not count towards the valuation of the park, even if you own the mobile home itself.
So the lot rent portion will. So I'll give you an idea.
Yeah.
Let's say you're in an area where lot rent's $300.
Okay.
And you have 20 occupied homes in there. So you would count the $300 for your lot rent. So you'd be $6,000 a month that you're making in lot rent. But 5 of those homes, maybe you're making another $200. So you're getting another $1,000. That $1,000 is still cash flow. Like, you're still happy because it's helping your bottom line, but it's not actually increasing the value of your park. And the reason for that is because it's seen as people that are renting are riskier. They can leave at any point, right? The other problem is, to be completely honest, is these homes, if they break or there's a problem, it's going to cost money to fix them. And if you are renting, you're responsible for it. So, and you got to insure the home too if you own it. So a lot of times we see that extra rent you're getting from the home is sort of a wash, that you're not actually making that extra money on balance. So comparing the two, I think RV parks are much easier to manage, in the sense that you're, like I said before, you don't have to deal with the logistics of the RV. Most of the time you can get away with just gravel, where mobile homes typically have to have concrete, and that's way more expensive. It's like $5,000-$6,000 per lot for that.
Wow.
And then your utilities are simpler on an RV. They typically need 35 or 45 or 35 or 50 amp. So you'll get something that can kind of handle either one of those. Mobile homes need 200 amps. So there's some small benefits of that. RVs, you can fit way more too. Typically in an acre, the municipalities won't let you do more than 8 mobile homes in an acre. Where RVs, you can double that, depending on the municipality. So, and you can charge more. Honestly, you can typically charge more for an RV.
The pad, or the lot, what do you call it? I guess the pad rental.
Yeah, lot rent. Yeah, pad rent. That works. Yep.
Is higher for RVs than for mobiles.
It is. Yeah, we charge about 50% more if it's in the same park. So if we have lot rent for a mobile home and then RVs right next to it, the RV's paying 50% more. And I know some parks are double what the lot rent is for a mobile home. So, but coming back, there's some disadvantages too. So
that was a nice question.
Yeah, right. Like on the RV side, obviously they can leave at any point. So it's a little harder to forecast your demand on an RV park. On a mobile home park, you can look at historic demand, which is honestly, it's a pretty good indicator of future, because they don't move, like we talked about before. So you can kind of feel relatively confident, unless you go in and jack rents up or make some big mistake, you're going to keep whoever you have in your park for the most part. And then you can kind of forecast new people by doing some test ads. You can kind of see how fast would I sell this home by listing a kind of a temporary ad to see how much interest you're getting. It'll give you some indicator of how fast you could sell the home. So that's a little bit easier. Also, if somebody wants to leave and they own their mobile home, they got to go sell it. So they're typically bringing in a new buyer, and you don't deal with that. So you're going from occupied to occupied. There's no vacancy. So
plus you kind of get to approve the buyer, if I'm not mistaken. Right?
Yes, you're totally right. Yeah. In your rules, you say we have to approve the buyer. They go through a background check, all that kind of stuff. So it's kind of a win-win for us on that.
Nice. Well, it can't all be sunshine and flowers. What are some of the, like, between the two of them, what are some of the downsides to either RV park investing or mobile home park investing?
Probably the biggest downside on mobile home park investing is dealing with homes, honestly.
Yeah.
It's a little ironic because that's literally in the name of the asset class, right? But there's just so much to do with it. When I first got involved, I was shocked at how much paperwork there was. Like, we probably own 120 mobile homes throughout our portfolio. Mm-hmm. So that means we have 120 titles we have to keep track of. We've got 120 lease agreements that are specific to these homes we've got to keep track of. Each one of them, some of them are in various stages of rehab. So we've got to figure out rehab bills, expenses, sales prices, where are they listed, how fast are they selling, all the metrics associated with homes. There's a lot to go into homes. We have a team of 11 people, and 4 people only do homes. Wow. Just to give you an idea. And the rest are like mostly property management roles that they're doing. So it's pretty intense. On the RV side, both of them have some infrastructure risk. So as you mentioned, some of these parks were built back in the 50s. Most commonly, we're seeing 70s and 80s. And so you have some failure because some of the infrastructure they were building back then was a little bit better than cardboard that they were using for sewer lines.
That's what it means. Septic systems and all that kind of stuff.
Yeah.
Could be a disaster. Yeah.
And then you got like iron pipes that are rust. Like, there's just all sorts of things that can go wrong with older. So you always want to make sure when you come in that you inspect. You've got to do camera lines into all of your stuff to make sure, okay, if I'm buying old lines, I got to make sure that my budget can cover that and still make a profit here, or we're going to lose our shirts on this deal. So that's that's both of them. But asset class specific, the only downside I can think of on the top of my head for RV parks is that risk of them moving faster. So
a little bit more turnover.
I think you can, and I think you can mitigate that by taking good care of them. They usually care more about amenities than a mobile home park would. So make sure we have like showers, laundry, pools if we can, depending on the area. And that usually keeps people happy and staying. So.
Very nice. Well, that's a great explanation, Brett. Thank you very much for that. Now, as we're wrapping up our interview, we're halfway through the year already. My goodness, 2025. What are your goals for the next year or so when it comes to growing the portfolio, or where are you guys heading?
Yeah, probably the most exciting goal we have for this next year is one of our larger portfolios. We kind of bought our properties in funds. So one of our larger funds is set up for a cash out refi in the next year, which we're excited about. I think we're going to be about a year ahead of schedule. Just kind of things have gone really well with that one. So that's big. I think over the next 2 to 3 years, we expect to get closer to 3,000 lots. We've been mostly on hold the last couple of years, haven't bought too much because we've been focused on home process, logistics, systems, operations, all that kind of stuff. But I think we've really dialed that in quite a bit. So we're kind of gearing up for more acquisitions here.
Nice.
So, see some good opportunity.
Excellent. Brett, this has been a lot of fun. I'm sure there's going to be some folks out there wanting to connect with you or find out more. If you were going to send them one place, where would you have them go?
I'd go to our website. We're Suncrest Capital. Website is suncrestcap.com. You can also email me at Brett with 2 T's. So Brett@suncrestcap.com.
Awesome, Brett. Hey, thanks so much for being on the show. It's been a lot of fun.
Of course. Thanks a lot, Dave. Good talking to you too.
All right, everybody. Take care, and we will see you on the next one. Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.